Hello, everybody. I'm Bruce Weinstein, and this is Ask the Planman, where each week we bring you special guests like my guest David Abrams today and talk to you about all things finance, insurance, and investments related. Today, we've got David Abrams from, I'm going to make sure I say it right, Insurance Benefits for Seniors. David is a longtime Medicare specialist, and we're going to bring you, the senior circuit, some information, conversation, and solutions for Medicare enrollment, Medicare participants, future or existing. So welcome to the show, Ask the Planman, David. Thanks for joining us today.
Thanks for having me.
Absolutely. Tell us a little bit about you, your business, and then we'll kind of dive into some nuts and bolts about Medicare for everybody.
I have been licensed in the insurance business for, going on 12 years. And 10 years ago, I took the direction of doing 95% of my business in the world of Medicare. Found that I enjoyed it very much, liked the helping people aspect of it. It was the educational side of the business that I liked, and teaching people what their rights, benefits, and entitlements are, and built an agency around that. And now we have a small little agency with about 20 agents and thriving and loving every minute of it.
Excellent. Congratulations. And I can't place the accent, but you sound like you're not from Florida. So where are you from?
Long Island.
Long Island. Yeah. There's only a small speckle of New Yorkers and New Jerseys coming to South Florida to eventually retire. So I'm sure business has been a struggle,
right?
To say the least. So, but I appreciate how you framed that, because we are in the helping business. And from all my years of being in the finance, insurance, investment world, I don't think there's been much more confusing to people than dealing with Medicare and Social Security.
It's the government. They don't make it easy.
Well, I wasn't going to finger point, but yeah, the G word, yeah, it's, if you need confusion, turn to page 6 of the guide of the government handbook,
right.
and
right.
Begin. This is not Medicare related, but it's Social Security related. My stepmother, a number of years ago, went to retire before, at that point, full retirement was 65 for her. That's been stretched out, right? And she'd been self-employed and, for a number of years. And let's just say she was going to take it at 64. I don't remember exactly. And she called the Social Security Administration. She spoke to 3 people with the same question, got 3 different answers, eventually picked what seemed to make the most sense.
Shoot for the one in the middle.
Yeah, right? I'm seeing triple. What do you go for the middle, right? And it was still wrong information. And she got burned and then was told tough luck. And it's like, there's no accountability. So, when it comes to Medicare, and for people to figure out, and we'll break it down, again, the show is to educate. We're not going to talk over people's heads per se, but we'll give them some of the basics, the A, the B, the C, the D, and all of that. But we'll break this down with your help today. And then maybe we'll share some experiences or challenges, or, where people lean towards certain things, and why do they see Joe Namath and Jimmy, JJ Walker every half an hour on their TVs, and, watch the Wheel of Fortune, and, oh, there he is again, They love the Wheel of Fortune Jeopardy hour.
Don't leave Magic Johnson out.
That's right. He is doing something now. All right.
Yeah.
So we'll go with that. Let's start with that. So again, we'll dummy it down. Sorry, I'm not calling people dummies, but the what they're seeing on TV, I'll toss it to you. What they're seeing with all the celebrities, the Joe Montana, Joe Namath, Jimmy Walkers, right, is for which side? So I'll give that to you. So describe what that side is, and then we'll do the sub side.
Like any form of advertisement, it's to hook somebody and to make them think and to make them call a number, whether you read the ad in the paper or saw it on TV. And what they're talking about in the commercials does exist for some people. This is free, that's free, you can have everything for free, but it's a small percentage of the population. It's for people that qualify usually for both Medicare and Medicaid, additional financial subsidy. So first and foremost, the ironic part is Joe Montana, for example, or Joe Namath for that matter, doesn't have a traditional Medicare policy. They're covered under an NFL retirement package plan that we should all be so lucky to have, right? But those commercials are geared to make the phone ring in these ginormous call centers. They're nothing more than lead aggregators. And what happens is they get the person on the phone and the person, you know what, you don't qualify, but while I have you on the phone, let me transfer you over to Bruce, my counterpart, and let him tell you what you do qualify for. Kind of like what's behind door number 2. And that's really the unfortunate side of that business.
So to frame it, this is predominantly the Medicare Advantage side
Yes.
of things. It's not necessarily Medicare supplements. All of these,
Correct.
to the best of my knowledge, is
Correct.
Medicare Advantage plans.
That's correct.
And in general, for the people that don't know yet or haven't gone there yet, is Medicare Advantage plans will tend to be, let's call it, free. And then there's additional benefits that might tie in that you're referring to based upon income levels, lower income levels, where the Part B could be rebated, right? So,
right. You
like,
can get a rebate. Exactly. They entice you with things that Medicare doesn't cover. For example, the Part B rebate you just started to talk about, dental, vision, hearing. But I caution people, even when they're looking, and the Advantage plans serve a purpose for a lot of people. But be careful. And I learned many years ago, a gentleman in sales, one of my mentors, and he said, don't get sold on the whipped cream. Make sure the cake is good. And to translate that to the Medicare, it is, dental, vision, hearing. I don't think anybody ever died from any of those. And nobody ever had a terminal hearing illness. So they are nice benefits. And like I said, the Advantage plans do serve a purpose for some portion of the population. But make sure that you're getting the right care and coverage that you need.
and understand where the holes or the liability falls
Correct.
back.
Correct.
Because the way we've described it is one side of it is pay me now, the other side is pay me later, right? And so there's no free ride, ladies and gentlemen. There's no free ride. You're making a choice. You're mitigating risk. That's what insurance is all about. That's why we're here. Insurance mitigates risk: car insurance, homeowners, fire, theft, whatever it is. So you're looking at potential medical expenses, whether it's hospitalization, surgery, doctor visit, routine care, EKG, blood work, right? And who's going to pick up those expenses when you potentially need them? And depending on the programs you're going with and your family history and your current health situation, you kind of have to make a best guess estimate.
Pay now or pay later. But you will pay. Even in the Advantage plans that have no monthly premium, especially here in South Florida and a lot of other parts of the country, there is no monthly premium. But you will, I don't like to say nickeled and dimed, but you will pay to play. You will have a copay for this and a copay for that. And, where on the supplement side, depending on the supplement you choose, you pay the same premium every month till death do us part. You know what your liability is. It's calculated in your monthly budget. And that's it.
That's it. There's no surprise later that something didn't get covered. Right. So for those who can afford on day one to take that supplement plan, their risk is pretty much locked into what that premium is. Right.
Correct.
And as we all know, premiums don't go down. They go up over time.
Right.
But let's also tie in so people understand Medicare Advantage. These carriers are paid by the government to provide you a network and services within the healthcare community. And people don't realize, like, Humana, Aetna, United Healthcare, whoever's in the space in your markets are getting somewhere in the neighborhood of $10,000 a year to manage your costs and manage your care and around your costs. And so they're not offering you these extra services and signups necessarily for free. They're just giving back part of what they're being paid
Correct.
by the government.
Which is right. That's the risk pooling that we talk about, and with any type of insurance, it's risk pooling, and that's exactly what they're doing. I hear all the time, "Am I giving up my Medicare?" or "I don't want to give up my Medicare." And my caution to people is not that you're not giving up anything, because the plan, in order to be a plan in any county that I'm aware of in the country, must offer at least, at bare minimum, what Medicare offers. It's just be careful and don't, I find the smaller, more regional plans give away more to entice people. Everybody has their own school of thought as to why. My feeling is they want to eventually be bought out by one of the big boys. Different conversation. But if you look at an Advantage plan through one of the big ones, the Aetnas of the world, the United Healthcares, a lot of them have gone to the national network. So now the snowbird that lives in the Northeast, that 6 months down here, 6 months up there, they don't have to have the supplement that they used to need because they can be in network in both places. So they've come a long way.
It has shifted, yeah. And that was a big reason to have a med sup, is jurisdiction wasn't as applicable, right? You can snowbird, you could travel around the country, and your supplement plan is going to cover you in all 50 states. It's freedom of choice. It's a PPO. It's you just pick kind of what you want without having to worry about that. And that, again, for those who can afford it, you're paying for that flexibility and that freedom. So especially down here. The other piece, because you mentioned like the smaller ones, the regional ones, is from our experience, right? Yours, I'm sure, you work more than just Florida. Florida is a hotbed, right, for retirement community, as in other pockets of the country.
Sure.
And so those will have stronger built-in networks already there for people because they've, Florida's been God's waiting room for, how many centuries now. And so, so the networks are here, where we are. You and I are both in the South Florida market, the Palm Beach, area. You could throw a stone and you've got plenty of coverage. But if you're in more rural parts of the country, not as populous, those Advantage plans are going to have very narrow opportunities or exposure.
Right. We just opened an office outside of Pittsburgh, Pennsylvania, of all places. We had an opportunity and we jumped on the opportunity. And one of their biggest Advantage plans is a plan called UPMC, which is University Medical. It's Pittsburgh, right? Pittsburgh Medical Center, because that's the big player in the market. So, that's their regional player. But it doesn't really help people that come down here and travel or travel anywhere.
Or go to Philadelphia,
Right.
let alone Pittsburgh, right?
Right, exactly. Right. Go to Altoona, you might be out of network. It's,
Right.
I sit down with a lot of people. Over the years, I've sat with thousands upon thousands of people. And they always say, which is better, the Advantage plan or the supplement? And my canned response at this point is the best plan out there is the one that suits your needs. There's no right or wrong. If your doctors are in network, if your drugs are in the formulary, which formulary is just a fancy way of saying we cover these drugs, but if your drugs are in the formulary and your doctors are in the network, that's a great plan for you. If not, let's see if there's a match with one of the other Advantage plans. Or if you haven't seen the orthopedist in 10 years, you really don't need to have him in network just in case. So there is no right or wrong between an Advantage plan or a supplement.
The problem and the frustration is when they get together and they compare notes and they say, how come you put them in that and you didn't give that to me? And it's like, I wear a size 12 shoe, you're a size 9. You want to fit in my shoe, or I should try and fit in your shoe? Like, it's not, there's no relevance to what somebody else has.
Absolutely.
But I'm sure you're peppered with, and we've encountered some people together, that it's like, you didn't tell me this and you didn't give me that, and how come you don't? I'm like, but based on what you said, this was our guidance on the plan that made the most sense for you. The fact that
I
Birdie at the pool has
right,
something different. I
right,
don't know Birdie's
right,
bank account, and I don't know how many feet she has. And go ahead.
right, right. No, it's their fear of loss is what it really is. And I think a lot of it now in today's world, unfortunately, is they've been so misled, not to go back to Joe Namath and Joe Montana, but they've been so misled. You have to remember the big companies start soliciting. We have to be careful how we solicit, but the big companies don't. But they've started soliciting these people 12 and 18 months before they're even eligible for Medicare. So they're so confused and they're so spun around. The,
100
the
pieces of mail
trust.
are showing up.
I used to joke around. And I'd say, somebody would call me, I'd say, "Do you have a chin pile yet?" I said, "What's a chin pile?" I said, "When you pull the chair up to the table, is the stack of crap that you've been soliciting up to your chin?" Because it's just so they've been so misled, and like we said, with the commercials that go on now on TV, it's a fear of loss at many levels.
Paralysis by analysis, right?
Exactly.
To
Right.
label it. There's so much, and then it's not like, well, I just have one brochure to read. Now I have 75.
Right.
Who the hell wants to read all that? David, tell me what to do. Bruce, tell me what to do. Right? And it's like, all right, let's have a conversation. And that's what we're here to do. And again, let's also put this in there for those listening. It doesn't cost you money to talk to me. It doesn't cost you money to talk to David or anybody on his staff. Medicare, whether you take a supplement plan, whether you take a prescription drug plan, whether you take a Med Advantage plan, they pay us. And they're paying us because we're the education force. You call us the sales force. We're the education
Right.
provider. And we have to go through certifications and
Oh yeah.
education. Our licensings have to be renewed. So it's not just an open-ended club that anybody can join and participate in. You have to go through continual certifications and training. So in exchange for that, we're compensated. So, and I'm sure you're asked, what it's going to cost me to work with you. It's going to cost you your time. You need to speak with me.
Right.
Like I can't sign you up on my own. I need to speak with you. Other than that, they're going to pay me to put you in whatever is best for you.
Right. And I don't, and I tell them all the time, I don't care what plan you take. It's my job to educate you so you can make the decision. I have insurance. I
That's
have insurance.
right.
This is for you. I'm going to educate you and you're going to make the decision. I'm not making the decision for you because I never want to get the you said, and it's not, so we're all about education.
My biggest fear line is you never told me.
Right.
I don't ever want to hear somebody say you didn't tell me. That's why
Well,
that's
because
why
if
I
it's
have a
home.
phone. I can't do
Right.
it with my headset. That's why this phone records the conversations.
Right.
Because I don't want people to ever tell me. Matter of fact, I did tell you. I have it saved in my file here
Right.
on this
Right.
audio conversation because I did tell you. Whether you heard me or understood what I was saying, that's, we can debate. But yeah, I'm nothing if not thorough and educational and make sure the head's going the right way and the eyes aren't glassed over. Right.
Right. Right. You don't get the deer in the headlight look. Right. Right.
What am I taking? Yeah.
Right.
It's pretty. So what else can we share with the audience? We're trying to give them the so whats. I think we hit some good so whats. So we have let's recap a little bit of it and then we'll expand it further.
Sure.
We have Med Advantage, relatively cost-free to the consumer that enrolls, right? Has some barriers, limitations potentially to understand. It's the pay me later side, potentially. And then we have the Med Sups, and the Med Sup is pay me now. Has more flexibility, it's more of an open network, it's not regionalized, kind of gives you that expanse. But aside from paying a very nominal annual deductible, which is like $243, I think, this calendar year, it just went up a little bit. Aside from that deductible, it's just your premiums. And again, depending what plan you take, I guess there's different Med Sup plans, but the most protective plan G is in George, right? Plan G these days. You're pretty much just looking at the deductible and that's it, right?
That's correct.
So outside of that, if you were to take a med sup, what else do you need to do with that? Let's give them that
Well, where
piece.
the Advantage plans usually have the drug plan built in, if you're going to do a med sup, or for the person that wants the self-insurance, just keep original Part A and B, you still need a prescription drug plan. And those come in all shapes and sizes. You know, they start at $12 a month and they go up, I think this year now we have them up over $106 a month, depending on the formulary. Again, the fancy way of saying, do you take a couple generics or are you on some pretty high-powered stuff? And what I'm finding is the average person, well, I don't want to general, in South Florida, because supplement prices vary throughout the country, but down here you could be at $275 a month to $300 a month. There are other parts of the country where it's much cheaper. But the biggest question I get, because I'm finding the disconnect, Medicare you still get at 65, but that's not, or you're eligible at 65. You get your Part A if you've worked 40 quarters, not necessarily 10 years, but 40 quarters. You qualify and they give you the Part A. But most people today are working till past 66 for the full retirement benefit from Social Security. So the big question I get all the time is, well, if I continue to work, should I take Medicare? Should I stay on my group? What should I do? And that's a different conversation. And that's usually what I call play by the numbers. Let's look at the costs associated with staying on the group, and let's look at the costs associated with going on to Medicare, which is going to be cheaper and give you better coverage.
And oh, by the way, do you have a spouse, and how old is that spouse, and when are
Right,
they going to be
right,
eligible? Because if you
right,
leave your company plan to go on
right,
Medicare, all of a sudden your spouse is dropped and they're not eligible for Medicare,
right,
and so
right.
we have a lot of juggling the balls, right?
Right. Like the gentleman I sat with today who said, my wife's only 61. If I give up the group, she loses the coverage. And I said, well, we can find her a plan. And he said, well, how comprehensive is it going to be? And I responded and he said, depends how long you want to keep your wife around for. We'll get her a more comprehensive plan. But that's a big factor in today's world, because the Social Security and Medicare used to both be at 65. Now they're not running. They're not aligned.
Coordinated
Right.
anymore.
Correct.
Yeah, there's a couple
So
years
that's a big
gap.
decision.
Yeah.
And again, that's a play by the numbers. How are you going to get the best coverage for the least amount of out-of-pocket expense?
So just before we lose the point on the prescription drug plan, so everybody understands, if you elect not to take it and you don't have a qualifying plan like a work plan that's providing it, there are penalties involved. A lot of people don't realize the prescription drug plan is not necessarily optional. It kind of is, but they're going to get you later with penalties that will elevate your price forever moving forward. So I'm sure you've had it, is you have people say, well, I don't take any medications, right? What am I paying for this, even if it's $7 or $12 a month? And then we have to explain to them why.
I don't talk about a lot of the experiences I had because of HIPAA, and I don't want anyone to ever come back and say anything. But I will tell you,
Talked
one of
about
my
me.
worst, right? One of my worst clients is a gentleman named Dad, and he didn't take any medications. And at 70, they put him on a little cholesterol med, and he said I should look at a drug plan. And now he's got a penalty for the 5 years he didn't have the plan. And he said, I can't get rid of the penalty. I said, nope, not until you expire. It's till death do us part. Right. It's a lifetime penalty. They take it right out of your Social Security. It's a garnishment. You don't even have the ability to say, I'm not paying them. Let them chase me. They take it off the top.
They chase you.
Yeah, right.
They print the check.
Oh, right.
They caught you. The chase is on. They caught you. It's all good. Yeah. So it again, I mean, we've seen it as low as $7. You said 12. It just depends on the plans, but they're very modest. But again, not everybody's wealthy and doesn't care about $25. And so like you said, by the numbers, is you have to look at budget. You have to, the financial planner hat comes into play of, well, where are you getting your income from? If you're just on Social Security, do you have pension? Do you have other assets? And, can you afford from 65 to 90, 25 years of that $250 a month payment plus inflationary increases? Because it ain't going to be 250 when you're 90.
Right.
It's
Right.
going to be like four something, right? So,
Right. Right.
It is age. We're getting older, and the prices are going up, and inflation is kicking it up. And
Absolutely. Absolutely. And I encourage everybody to look at their drug plan annually. Formularies change. The prescriptions you take can change. So that's something you should review annually during open enrollment.
No, it's a near requirement because the drugs come and go.
Right.
We got a phone call yesterday. She's younger. She's not Medicare, but whatever the drug was she was taking was on that higher table, right? Not generic. And I think the person had MS, if I'm not mistaken. And the medication's a couple $1,000s a month. And the insurance company, this is an under 65 health plan. The insurance company said, we're not covering that medication anymore. And they're like, what do we do? I'm like, we're going to have to shop, see what's around. And, but
I've had situations like that. I sat with a gentleman who was on a prescription that was for leukemia. It was a pill he took every day. If he didn't take the pill, the leukemia was going to get the best of him. The prescription, and I'm going back a few years, in those years, the prescription was, I think, about 11.2 or 11.5 a month. So he was correct. So he said, I'll max out my credit cards in the first quarter. What am I going to do? So I sat with him, and this might help you, a person with MS, and I called with him the Leukemia Foundation. This is why they have charities, and this is why they raise money throughout the year, and this is why you should always put a few bucks in the envelope if you can, because you never know. And they said, what type of leukemia do you have? We have whatever he had, acute myeloblastic, blah, blah, blah. They sent us to that department. He had 30 days to produce the documentation that would support that he only made whatever it was, 30, 40,000 a year and couldn't afford that. But as of the next day, basically, they were giving him the subsidy and he'd be able to keep it. His prescription went down to $35 a month, manageable. So I encourage, if you ever come across a situation like that, call the MS Foundation or guide the client to do that. But those charities are there for a reason, and I never really thought I didn't think they were going to do anything, but I went through the motions, and from 11,000 and change to $35.
That's amazing. That is astonishing and a great piece of information. I would even call the pharmaceutical manufacturers.
Oh yeah,
because they have similar programs for those who can't afford, and they have their own foundations, and they'll. I mean, I see it more and more on the commercials, which have 1,000 pages of disclosures on them.
Yeah, right.
And in there it'll say, if you can't afford this medication, call this number.
Right, you may be able to get it for $10 a month or whatever.
Yeah. So it it's not one of those recreational drugs that you just kind of pick it up on your own. It's but in something in that regard. But the problem is that they have the audacity to charge $11,000 because somebody is either out there paying for it, whether it's an affluent person or an insurance company that's going to pick it up, because they know somebody's going to be paying, or they're going to negotiate it down, and and we can, right? And that's been a big, the EpiPen, was a big thing a while back, and
look what happened with insulin in the past couple of years. It went to the point where people can actually have it now. I've been to many homes where, I take a half a pill every day instead of a whole pill. I stretch my prescription. That's not a way to live. It's not a way to live. The doctor says you need whatever it is, 10 milligrams. You don't take 5 and take the next 5 the next day. It's not what the doctor said to do.
Today, I'll take a little bit more tomorrow.
Right. You'll have a Bissell here.
So let's give a couple of just things you should know items as we wrap up our time now. There's varying enrollment windows, right? We call them enrollment periods. So again, for those not in Medicare yet, let's talk about what some of those dates to be cognizant of, how they get enrolled, when they can change. There's different windows throughout the year. The government regulates. You also mentioned about the carriers getting to do things you and I can't do. Is we can't really solicit people, right? We have, there's obtruse ways of doing it, and then there's the kind of like, again, so people understand. If David knows somebody that needs Medicare, he can't tell me, Bruce, call so and so. They have to call us.
That's right.
Okay,
right.
So the consumer has a lot of protection here. If you didn't know that David and I can't just call you randomly out of a phone book. We can't knock on your door and say, hey, I see you're turning 65. Let's have a conversation. And even if you say, I just signed up my friend, call her. She needs to get it as well.
Have her call me.
Have her call me.
Right. So the takeaway right there,
yeah,
and I didn't mean to cut you off, but the takeaway right there for anyone who sees this is the person who calls you, or the person who door knocks you, or the person who solicits you, by definition, is an unscrupulous agent. Not the person
they've already broken the first rule.
they've already broken the first commandment. So therefore, that's not a person. Whether you call somebody else or reach out to one of us, but that's not the person who knocks on my door or the person who rings the phone has already broken the first commandment.
Yep. No, 100%. Look, there's rules in place to protect the seniors. Now, it may not be the 64-year-old as much as the 84-year-old, and that's because the seniors get preyed upon, especially in a marketplace like South Florida. And so they convert them in, they knock on the door, they come in, and they're buying aluminum siding, and they got shutters on their door, and they got a new flooring, and they're like, I thought I was getting a prescription drug plan. And so they're sold. So with that, let's tie in what that's called, is we have what's called a scope of appointment. So if you're not getting a scope of appointment given to you ahead of time, what it basically is, I'll let you explain it. Go ahead.
It is basically a permission slip. And it says on that scope of appointment, and you as the consumer will check the boxes, and it says, this is what I want to hear about today. I only want to hear about a drug plan, or I want to hear about Medicare Advantage. I don't want to hear about everything else. And if you do want to hear about something else after the meeting, technically, you're supposed to sign another scope of appointment for that other product.
So there's usually 4 items on the checkbox, right? So we try and get everybody to do all 4 so we can cover all the bases. Inevitably, they're going to say, well, what about my car insurance? I cannot talk to you about it. You see it's not on that scope of appointment you signed. And in fact, I need to close my briefcase, hang up the phone, end the Zoom meeting. You call me another time and we'll talk about your auto insurance, right? So again, the scope of appointment is to protect, here's the so what's, it's to protect the consumer that this is what we're talking about and nothing else. And so that they don't get
confused, turned around. Right.
Of now they bought an annuity and they just got a final expense life insurance. And,
right.
And
new Kirby vacuum cleaner.
Yeah, and their phone service just changed, and and this person's walking out with $10,000 commission. So the scope of appointment is imperative and again mandated. Right, it's deliverable. You could do it physically, you could do it electronically, but it is required, folks, that you are presented that before you get into the weeds with anybody on what's available to you in quotes. All right.
I've had many people say to me, I'm not signing anything. I said, do me a favor, read it, and then you'll sign it. What? And they realize it says it basically. It's to protect the consumer. It's not for me. It's to protect you.
You're signing me up. You're signing me up. No, I'm not signing up for anything.
No,
it's
really
telling you what we can talk about. Right? It's protecting you. And again, people just don't understand what they're getting involved with. So, all right, so real quick, let's talk about the enrollment period. So somebody turning 65.
Start doing your home. Go ahead. I'm sorry.
No. I wanted to kind of give them some
go ahead.
pieces here, but no, I want you to jump into. So you have 3 months. You have 90 days before your birthday. You have 90 days after your birthday to do what is your initial enrollment period. So if your birthday is May 15th, that's February 15th, your window opens, you can enroll, you'll be effective for May, and you're in whatever program that you have. If you somehow missed it, you were Rip Van Winkling, and it's now August 15th, you're running out of time, right? Your 90 days is going to be up. And so if somebody misses that 6-month window, then the next enrollment period is called open enrollment.
Open enrollment, right.
which usually runs November, December.
Right. October 15th to December 7th.
Okay, so you only have that window to get in and meet with David and his people and figure out what you want to do, what you need to do. Again, people have transitioned from a company plan. That might be a special enrollment.
That's a special
window.
election period. Right. There are times throughout the year somebody can get on. If you're losing your group coverage, it creates a special election period. If you've moved to a new zip code where that old plan's not effective anymore, you're allowed. That creates Medicare says you're entitled to have a plan that services your home zip code. But I do encourage everybody who's turning 65, 6 months out, get a hold of Social Security because, again, we live in a COVID world and everybody telecommutes and Social Security is so backed up, you need that Medicare card before you could even talk to you or I about an Advantage plan or a supplement or a drug plan. That's the key to the kingdom, that red, white, and blue card. Without that, you're not entitled to anything. Right, that's it. So.
Yeah, we can't get them anything. So anything else you want to add in? Anything else you think we should
I think we've covered it all. No, I think we covered it all.
We can always go deeper, but we don't want to bore people into sleep mode talking too long. So we're a little over our half-hour time. I try and keep it to, but this is good stuff. So I want to thank our guest, David Abrams, down here in South Florida, but you're in multiple states, true? So
Correct.
You guys,
Correct.
Your firm, your agency, besides this Altoona-based, and by the way, that's not a tuna fish, folks. That's Altoona's. That's not a tuna fish.
It's an Altoona.
It's Altoona, right?
Right.
His company is insurance. Make sure I've always said it right. Insurance benefits for seniors. All right. You can get him through us. You can reach him through asktheplanman.com. You text Planman to the number 321-421-5213. We'll get you in touch with David in the appropriate markets if you need to. And folks, please like, subscribe, share, check the information out below. Go to our website, Ask the Planman. Email us at info@asktheplanman. We want your questions. I love having guests like David to give us topical conversation to educate you, but we want to hear questions, and then we have somebody come on with their challenge of a Medicare thing, and we get David back on, and we'll chew at the bit and see what we can do. And so,
absolutely.
But I want to thank you for being with us today. I hope you enjoyed it. I hope the audience enjoyed it.
Absolutely, yeah.
It was fun. Yeah. Well, fun. We'll go chase the little white ball again soon. David and I, we try to play a little bit of golf here and there, but the old adage is the better your golf game, the worse your business is. So our golf games sink, and we work too hard, and so our golf suffers. So it is what it is.
But my back feels good.
That's good. That's good. Again, everybody, thank you for listening to Ask the Planman. We'll see you soon with some new topics. And I don't know, that's about all I have to say. So hit us up at 1-844-PLANMAN. That's our toll-free number. Leave a message with your questions. If you want to volunteer and come on the hot seat and be a guest, let us know. We'd love to have you. Thanks, everybody. My name again is Bruce Weinstein. Thanks for listening to Ask the Planman.
Some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and